Hello investors, how's everybody doing? So I'm back again with my M1 Finance portfolio. So before we get the video started, I just want to talk about the market right now. The China and US trade war is really like affecting the market. But as you can see that even with all of this going on, my portfolio is actually doing pretty good, and I've actually been going up in the last couple of weeks, so it's not actually been too bad for me. As you can see right there on my portfolio, I started off in June, and it's kind of been like up there around like the $100, and then it went down actually to I was actually down about $40 in probably like July, beginning of August. And then as you can see there with all these dips, it kind of just spiked up, and now I'm up over like 4%, I believe 4.5%, and only about $38 of that is actually from dividends. So this portfolio is actually doing good, and that's why dividends, people say dividends are king. Pretty much dividends are something safe to hold, because let's just give you an example. So let's say you owned a stock that was worth $100 at a 2% dividend. Now let's say that stock goes down to $50 because of a recession coming up or something happens in the future, and that stock cuts in half to $50. It's still going to have that 2% dividend. So let's say you bought stocks at the $50 per share, and you're getting 2% dividend. So the 2% on the $50 is going to be $1. Now let's say that stock goes up to $100. You're still going to be receiving 2%, but instead of that being worth $1, it's going to be worth $2, because 2% of $100 is $2. So it's kind of like you're getting a 4% dividend because the price goes up. So as the price goes up, you're going to be making more dividends coming in, which is going to be in your favor. Okay, so let's get started. So first off, we have the real estate sector I have right here. So we have store capital. I am up $41.97, which is about 9.4%. My average share price was $34.84. It is currently trading at $37.76, and we have about 13 shares of this, so that's not bad at all for a REIT. Next up, we have Realty Income Corporation. So on this one, I'm up about $8.35, which is almost about 3%. Our average share price is $72.54. It is currently trading at $73.81, and we own 4.3 shares of O. We have Welltower. Welltower, we're up about $24 on this one, which is about 9.6%. Our average share price was $82.49. Right now it's $89.56, and we have about 3 shares. REITs have been doing really, really good for me. As you can see right there, my investment of $1,000, it's up about 7.4% in the REITs section. So, REITs have been doing really good. I feel like they're a little bit overpriced right now. It's not a good time to buy in. You might want to wait for a dip or something, but right now it's kind of everything's kind of almost at an all-time high right there. Next up, we're going to have consumer. In the consumer, we have Coca-Cola. We're up about $25 on Coke, and it's 8.6%. Our average share price was $51.07. Right now it's trading at $55.04. And we only have 5.8 shares, but that's not bad. Coke is a very good, long-term investment. If this one was to dip in the future, I'm definitely going to be buying more, because Coke is just amazing. Next up, we have Walmart. We're up about $22.34, which is about 8.5%. Our average share price was $106, and right now it's trading at $114, which is pretty much at all-time highs. And we have 2.5 shares of Walmart, not too bad. Another one I might want to stock up in the future. Next up, we have Pepsi. This one's not one of my favorites, but I'm up $7.36, which is about almost 4%. Our average share price is $131.55. Right now it's trading at $136.73. And I have 1.4 shares of Pepsi. Last but not least, in this section, in our consumers, we have Amazon. I'm up only about $3.55, which is 2.46%. Our average share price is $1,733. Right now it's at $1,776. We only have 0.08 of shares, not that much, only $148 worth, but just something to have in my portfolio, because Amazon, long-term hold. So as you can see, in the consumers, we're up 6.61%, which is about $58, not too bad. Next up, we have bonds and ETFs. So first we're going to have SPHD, which is the S&P 500 high dividend low volatility ETF that I have. In this one, we're actually negative 0.8%, which is a negative $2.70. Our average share price was $41.30. Currently, it's trading at $40.51, and we have 8.2 shares of this one. Long term, obviously, I believe that's going to recover. Next up, we have Vanguard REIT ETF. So this is like real estate that REITs. I'm up about 5% on this one, which is $14.76. Our average share price is $88.65, with the price right now at $92.22, and we own 3.35 shares. And then last but not least, we have the bonds. It's an investment grade corporate bond ETF, and I'm up about 7% on this one, which is about $14.85. Our average share price is $121.04, and currently it's trading at $128.80, and we have 1.7 shares. So as you can see on this one, we're up about $26.87, which is about 3.18%. Not too bad if I do say so myself. Next up, we have the Telecommunications. So Comcast is our first stock. We're up about $16.02, which is about 5.5%. Our average share price is $42.45, and right now it's trading at $44.26. And we have about 8 shares in this one, not too bad. I think Comcast has some big things coming in the future, as well as Verizon and AT&T. They're all going to be competing in the future. On Verizon, we're up about 2.3%, which is $6.23 positive, and our average share price is $57.46, at an average right now at $58.16. And then we have about 4.7 shares, 4.8 shares. And then AT&T, I really lucked out on this one. I bought it at a perfect price. We're up about 11.7%, but I do wish I would have had more shares. We're up about $16 on this one. Our average share price was $32.06. Currently, it's trading at $35.26, but we only have 4.2 shares. I really wish I would have bought more. So in our telecommunication sector, we're up about $38.16, which comes out to be 5.43%. Not too bad. Next up, we have utilities. In our utilities, we have SO, which is Southern Company. We're up about 7% on this one, which comes out to be almost $16 profit, at an average share price of $55. Right now it's trading at $58.26, and we have 4.1 shares. Not too bad. Next up is Dominion Energy. With this one, we're only up about 1.7%, which comes out to be about $3. Our average share price is $76.33, and it's currently trading at $77.63, and we only have 2.4 shares. Last but not least, we have Duke Energy, and Duke Energy is up about 7%, which comes about to be about $10 profit currently, at our average share price of $87.38. Right now it's trading at $92.74, and we have about 1.5 shares. So in the utilities, we're up about $29, which comes out to be 5.28%. So they're all kind of they're all above the 5%, 4% area, which is pretty decent. Next up, we're gonna have tech. In the tech section, we only have Microsoft, so it's not too much in there, but we have we're up about almost 10% on Microsoft, which comes about to be $29.30. Our average share price was $126 almost, and right now trading at $137.79. We have 2.38 shares. As you all guys know, I have a bunch of Microsoft stocks on my Robinhood, but I added some on here just to have, as I just said, actually $29.30, which is about 10%. So pretty decent in the tech section. Next up, we have finance. Finance not doing too well. We only have JP Morgan Chase. So JP Morgan Chase, we're up about 1.27%, which comes out to be $4.49. Our average share price was $109.14. Currently it's trading at $109.86, and we have 2.8 shares. So right there you can see we're only up about 1.3% on this one in the finance sector. Last but not least, we have the health sector, and this is my worst sector, so I'm really glad that I'm not invested that much in it, because I knew that this was going to be one of the weaker ones with the elections coming up and a lot of changes going on and just a lot of bad stuff. But Johnson & Johnson, J&J, we're down 5% on this one, which is about negative $9. Our average share price is $136.60. Currently it's trading at $128.36, and we only have 1.28 shares. We have Pfizer. Pfizer is down 16%, which is about negative $28. Our average share price is $42.93 and currently trading at $35.55. We have 4 shares, and for the health sector, we're down about $38, which is about almost 11% negative. Well, as you can see right there, most of my sectors are pretty well. I mean, real estate 7%, consumer 6.5%, bonds 3%, telecommunications 5.5%, utilities 5%, tech about 10%, finance 1%, and then the health is the one I'm down about 11%. But overall, as you can see, the portfolio, we started off with 5,000. We have $5,223 almost, which is about 4.5%. So I'm beating the average of 3%, and my goal was to at least get 3% or higher. This dividend portfolio is at about, I believe, 3.5 to 4% dividend yield. So I receive about $200 every year just from dividends, plus growth from the stocks. So far, we've only earned about $38, I believe, in dividends this year because I started this off about halfway through the year. But I'm reinvesting into the portfolios in here, so it's been doing really good. I believe that dividend investing is a great form of passive income for the future. So I'm just going to keep on reinvesting and adding more money to this and buying more stocks when I feel that they're coming at a good buy, when they're down on the low, when something is happening. So if a recession does hit or something negative happens, that's when I'm going to be buying more and more stocks to add to the portfolio because they're going to be paying me dividends at a very, very good price. So what do you guys think? Are you guys getting good dividends? What is your best dividend stock in your portfolio? Leave a comment below and let me know how much you earn every year from dividends. What is your percent? How many percent do you get per year? Mine is about 3.5 to 4% dividend. So yeah, guys, go ahead and smash that like button for me, subscribe to the channel, leave a comment below, and I hope I see you guys around because I'm going to be making more videos about dividend investing and just investing in general in the stock market. So I hope to see you guys around.